Good morning, everyone. My name is Timothy Lee, and I'm a mining analyst here at Red Cloud Securities. We welcome John Sanders and Graham Donahue of Pasofino Gold. They will speak to us about Pasofino's Dugby Gold project in Liberia, where it has a sizable resource with expansion potential that is moving forward in development. Gentlemen, you have 10 minutes, and then we'll have a 5-minute Q&A at the end of the session. Attendees, please feel free to ask questions using the Q&A link below. Take it away.
Thank you very much, Tim. My name is Graham Donahue. I run Corp Dev for Pasofino Gold, and we've got John Sanders on as well, as you can probably see on your screen. Given that we only have 10 minutes to present, we're going to run through the highlights quite quickly and then pass it over for Q&A. So hopefully you can see the screen share in front of you, and I'm going to touch on a couple of the main points and then move to the next slide. I think what separates Pasofino is that we are starting with quite a large-scale asset in West Africa. Currently, you can see in the second bullet point there, we're 3.6 million ounces in around 1.5 grams per ton. That is a significant asset with good growth potential. We are moving forward with a feasibility study. In fact, we released a preliminary economic study to the market earlier this year, around July, and we will go through the highlights in a few slides. But our feasibility study will be ready in approximately April of 2022, and we're well on the path to completion there. So what you get with Pasofino is a large-scale asset that's growing through exploration, plus an economic study that's going to be turned into a feasibility study in the next few months. I'm going to highlight Liberia because several people won't know it, but before that, I'll just quickly talk about the management team. So we've got John Sanders on here. John has probably 35 years of experience in Africa in exploration, building, construction with AngloGold Ashanti, and you can see the list below there, LSC Lithium quite recently as well. Ian Stocker, who unfortunately can't be with us today, has over 45 years in Africa and has built some very well-known mines like Geita, Bibiani, Obuasi, and most recently, he was a founder and director of another success story called K92 Mining, which I'm sure most of you know. He was the founder there and is now still the lead director. So I'm going to skip over to Liberia. It's not a well-known region, but it's a very interesting region to us. You can see there that it's been a stable democracy since 2006. And even if you go further back into their history, they actually have quite a good democratic history. It was just the 80s and 90s where they ran into quite a bit of infighting and most well known for some of the stories around the Diamond Wars. But in fact, the jurisdiction is quite attractive to us. And after 15 years as a democracy, they're starting to make good progress on foreign direct investment. It's got a small population, 4.7 million people, and it's predominantly English, and it's 90% Christian, which makes it less likely to have some of the religious infighting that some of our neighboring countries have. What's really interesting to us about Liberia, and the reason that we were drawn to this project to begin with, was the fact that it's 70 kilometers away from a deep water port. You can see in the graphic to the left there that there's the red outline towards the bottom right is our tenements, and the yellow dot is where the Dugby project is. That's 70 kilometers from the port of Greenville, along well-used logging roads. We did spend a couple $1 million earlier this year upgrading the roads, but we've had no trouble accessing it, and we've had so far nothing but smooth operations in Liberia. The other thing that stands out about Liberia is its location from a geological standpoint. You can see all the neighboring countries there. There's been plenty of discovery and production in those countries, but Liberia has not enjoyed the same amount of exploration dollars being spent in the last few years as a result of the tough political situation in the 80s and 90s. But we have every reason to believe that the exploration potential is there, and we like being one of the first movers and having a significant land package of 2,600 square kilometers to work with. And finally, before I hand it over to John, in Q2 of 2019, the government passed the Mineral Development Agreement. I won't go through every point, but the bottom line here is that they made the point that they want to move the Dugby project ahead, and they've laid out a very good fiscal framework. 25-year option, 25% tax rate, and we get back our capital expenditure on that, which will be, by the time we put into production, somewhere in the $400 million US range, probably closer to 500. So we have quite a bit of expenditure to write off against the taxes. There's a 3% royalty rate and a 10% free carried interest. So those are the highlights of the Mineral Development Agreement that was put into law a couple of years ago. I will now pass it over to John to go through the preliminary economic assessment and then some of the exploration success we've had.
Thanks, Graham. So as Graham has stated, we've completed a PEA fairly recently. And this has formed the basis for the milestones and the targets for the feasibility study, the bankable study, which is on the go at the moment, and we're nearly 60% complete, and will be complete at the end of April next year. The parameters are 5 million tons per annum operation, 2.5 million ounces over the 14-year life of mine. We're looking at about 188,000 ounces per annum on average, with a peak production of 226 in year 8. The life of mine strip is fairly favorable, 4.5 to 1. However, in the early years, the first 4 or 5 years, it's 2.8 to 1. And what's really pleasing, other than what Graham has alluded to in terms of logistics, and if we have time, we'll go over that in more detail, is that the power costs are relatively low. And we're looking at currently in the PEA, and we think we'll come in around about here at 18 cents per kilowatt hour, although we are looking at reducing that considerably with potentially PVs, and we're also looking at LNG, which is a new development that may well be the horse that we ride into from a power perspective. Development capital, 391 million initial capital, which is fairly favorable. And the land package itself lends itself to potentially additional pits in the area. We've got 2,500 square kilometers, and we've got over 100 targets that we need to service, of which we've only serviced 4 of those. In terms of the economics, we have an NPV of 825 million and a post-tax of 627 million. So fairly healthy at a $1,600 gold price, at the IRR of 34%, and a nice payback period of 2.8 years. Also, what's pleasing is our all-in sustaining cost is about $893 an ounce. So all in all, fairly favorable. And as I said, we think we'll come in with these sort of metrics or better at the end of the DFS. Thanks, Graham. Just as I alluded to earlier, very large permit, 2,500 square kilometers. As you can see, where the Dugbe and Tuzon deposits lie, 4 kilometers apart. The rest of the ground has been explored thoroughly from a geochem and trenching perspective. Luckily, for us, a huge amount of work was done by Hummingbird, our joint venture partners. As I said, we're looking at over 100 targets. But the two most promising are the Bukonjeda license area, which you see in the center of the map there. That's an old exploration and mining area from an artisanal perspective, with 3 shallow pits there and lots of drilling that we need to do there to prove up a resource. And there is expansion potential both at Dugbe and Tuzon. Okay, continue please, Graham. So we upgraded the resource last year, and we're busy doing that at the moment, both on Dugbe and on Tuzon. We completed the exploration work, the infill drilling on both deposits, and remodeled both of them, reblock modeling them at the moment, and we'll be announcing those probably in the next 2 to 3 weeks. And we're looking at a current estimate in the inferred category at about 823,000 ounces for Dugbe at a grade of 1.57. We estimate that we will probably move to about 75% of this, convert 75%. So 75% of the resource will be in the indicated and measured category. We've also pleasingly discovered a fold at the southwestern end of the deposit, which we think is going to add significant ounces, but also improves our strip ratio because it's relatively close to surface. Next one, please, Graham. So advantages are here. It's 2.5 kilometers long, 1.3 kilometers wide, very shallow dipping, as you can see in the section, and you can see on the left-hand side the fold that I've alluded to. It's only 4 kilometers away from Tuzon, so obviously we're going to have a central plant. Tracking distances are very short. Lots of synergies between the two in terms of plant, waste dump, TSF, etc. Okay, Graham. There is room for expansion. This is a long section through the Tuzon deposit. So in other words, the folding, it's a folded deposit. The folds go into the page. We have 2.03 million ounces there, currently at 1.5 grams a ton. And the current MRE hopefully will expand that resource number. But we also have quite a lot of trenching going on strike between this deposit and the deposits to the southwest, and we'll show you that in a few minutes. So this is a cross section through the Tuzon deposit. You'll see it's a closed fold. There have been 3 phases of deformation here. And what's actually quite neat about it, it's brought all of that mineralization into the pit. You can see the pit outline there. And if you can't see it right now, you'll be able to get hold of the flip book and have a look at that. Mineralizations at surface, very small, thin oxide layer, extensive, greater than 2 gram a ton zones. So we have lots of potential here, not only from an extension point of view, but we have a solid MRE, which is going to come out, which is going to allow us to schedule the mining with high confidence. Other targets, I alluded to 2 of them. Just if you go up one, please, Graham. Just in the center of the deposit, we talked about the Bucongeta area. The photograph says it all on the right-hand side. There's been mining from an artisanal point of view for 100 years here, actually. There's some historical exploration work, but wasn't thorough, but some really nice intersections of up to 6 grams a ton underneath these pits, and we need to infill drill that and put a resource together here. Next one. And then just from a strike extension perspective, from the existing deposits, so you'll see Tuzon on the right-hand side, and you'll see along the Dugby shear zone, we've been exploring intensively along there, and we've come up with some drill-ready targets now. Some of them are up to 36 to 40 meters in a trench at 0.6 grams a ton. We've had some grab samples about 100 meters away from that particular trench at 3 grams a ton. So highly prospective. The structural environment is correct and good for a potential discovery here. So we're quite excited. We'll start drilling that November, December. Next. Thanks,
James, should we hand it over to Q&A now?
Sure, unless there is another, if you want to do one or 2 more slides, if there's anything else you wanted to say real quick.
Yeah.
Maybe I could just recap quickly and rather go through the slides. So as Graham's alluded to, a large resource sitting there, 1.5 grams a ton. We have an advanced bankable feasibility study on the go. It's 60% complete. We have an MDA in place, which has de-risked the operation significantly in terms of all the metrics that Graham talked about, tax, etc. Logistics are very good. We're 70 kilometers away from a medium-sized port, and exploration upside is really good here. So, we think from that perspective, and the fact that it's been de-risked significantly by previous work, and the DFS is almost complete, that by the end of May next year, we should be able to issue that and then go into a funding phase.
Great. Thank you, gentlemen, very much for the informative presentation. We'll now move to the Q&A. We do have a question or 2. I think first, kind of clarifying obviously the earn-in and buy-in to the project. What does that look like? I think the government retains a 10% ownership, but you are buying into essentially the rest of the ownership of the project.
Do you want me to take that, Graham, or you?
Yeah, go ahead, John. I've just pulled up the slide there with the earn-in agreement.
Okay, so yeah, the earn-in agreement is a very simple one. It allows Pasofino to earn a 49% economic interest in the project itself. The government of Liberia takes a 10% free carry, which is pretty standard in West Africa, and in fact, better than most at the moment. And once and that rests on completing the exploration, which is now complete, the infill drilling, the resource generation, the exploration on the greenfield side, and the delivery of a DFS, and that triggers the earn-in of the 49%.
Great. All right. Well, thank you, John and Graham, very much for the presentation, and thank you everyone else for joining us today.